It looks like a major change in trend is underway with how sterling is trading relative to the euro. The over the last couple of months, and particularly between November and April, we had a big rally in the euro relative to the pound. This was driven by two factors. The first major factor was that the Bank of England backed away from its plans to raise interest rates in the first half of 2016, going back to neutral. This was ahead of the upcoming Brexit referendum. So first thing we had was the sterling fell against pretty much all major currencies based on the Bank of England being not as hawkish as it had been in late 2015. Then we had the added concern of what could a Brexit uncertainty mean for the UK. Now, what's interesting is that in the recent months, since about February, Brexit concerns have started to fade, or at least have less of an impact on sterling. We had, when we first had the deal and people realized that yes, this vote's really coming, we had a big sell-off. But since then, each impulse down, each weakening in sterling related to people picking sides or other related turmoil has had less of an impact on the markets. Now, we could still see some significant volatility in late May, early June in the month run up to the vote, but for the time being, we are seeing the pound strengthen relative to other markets. And this week, we could see interest in the pound again because we do have a Bank of England meeting, so we could see some kind of statements around that or forecasts related to inflation or GDP or what could the UK look like after June. However, what's important is because this vote is so significant, it's unlikely you'll see the Bank of England do anything now. They're in pretty much sit on their hands and wait and see what happens mode and try and stay out of the crossfire, basically. But while this is going on, we've got this fabulous head and shoulders top forming in euro pound. Look at this. So we had a left shoulder here in February, the head of the pattern early April, and now we've got the right shoulder here in early May. And this shoulder resistance level here is about 79.50, and we're seeing now we come up with, so we've had a pullback, rally to the head, pull back again, and now we're seeing 79.50, and it's starting to roll over again. And this is a pretty big negative turn here to confirm that this right shoulder has now been put into place. And also look at this. When we hit the head of the pattern up here in early April, we also had a negative divergence in the RSI and an overbought reading, which meant the upward momentum was starting to fade, and the shorter term upward momentum was getting overextended. And now we've seen this start to work its way back down. We also have a rising neckline here, current support and neckline support in and around 77.50, 77.25. That's the key support area there. If that gives way, we could see this move significantly lower with the next retracement in around 76.80, and this down here, the 50% retracement of that rally is in and around 75.45. So there is room for a pullback here should sterling continue to strengthen relative to the euro. Just looking briefly here, client sentiment on euro pound. Clients are quite bearish. That's sterling bullish, and to the tune of 80 to 82%. And we're seeing more in terms of position value than in terms of number of clients. That tells us that bears are taking larger positions than bulls, and appear to be have more conviction at this point in time. I just wanted to quickly highlight here the cable as well. So we are seeing this recovery here as well. We had I showed the head and shoulders top. We kind of have a head and shoulders bottom forming here in cable as well. A left shoulder January, head in February, a right shoulder kind of carving out here over March and April, and it's starting to work its way higher. We've broken out of a falling neckline, and to this point are continuing to hold above that breakout point. So that's been encouraging. RSI is holding 50. That also indicates you're still in an uptrend. Could see a correction back to 144, but maybe, but current support's around 144.60, and if we start working back up around 146.25 is this initial Fibonacci resistance level here. So keep a look. Each time we get these pulses down, they're not hitting as hard as the initial one back in February.